Welcome to today's episode. If you're a first-time home buyer or thinking about becoming one, this episode is going to change the way you look at home ownership because I am going to break down one of the most powerful tools today that is available when it comes to home buyers, and that is buyer's assistance. This is going to be your ultimate guide to down payment assistance, what buyers need to know. So what I am going to do is by the end of this episode, I'm going to make sure that you understand what down payment assistance, also known as DPA, actually is in real simple terms, how DPA truly works behind the scenes, the different types of assistance programs and how each of them will actually benefit you as a home buyer, what down payment assistance programs are designed for, and the qualifications for them, the credit scores that's needed, the documents, the income levels that DPA requires. You'll also learn the different type of DPAs, whether it's the FHA, conventional, VA loans, the exact expenses DPA will cover, such as your down payment, the closing costs, and the prepaid fees. The biggest myths and misunderstandings about DPAs, why your mortgage broker and your realtor can make or break the success in your loan, how the lender approval process works step by step, and how you can actually check eligibility instantly. This is not the kind of information most realtors will share. This is definitely not the type of information a lot of lenders will even explain to you. And honestly, this is not the type of education first-time home buyers usually get. But today, from Ebony B Co. with Home Loans Network, powered by Morty, you're going to get everything. So, let me introduce myself. If you're new here, I'm Ebony B Co., a mortgage loan originator, a business consultant, and the ultimate power of retiring people and helping them buy their first dream home and real estate investing portfolio. I have helped people for over 25 years, from first-time home buyers, renters, business owners, I-10 borrowers, self-employed individuals, middle-income household families, veterans, and like I said, real estate investors and more. I help them understand mortgages, credit, the loan process, and the difference between programs that help people buy homes with little to no money down. And overall, this is how they become successful. And one thing I've learned is when it comes to business and sharing information, sometimes people don't like to do that. Most people can actually afford the monthly mortgage, but guess what? They don't know how to keep the home sometimes. Sometimes people know how to open up a business, but guess what? They don't know how to grow it. And that's where I come in at. So when it comes to the home buying process, what home buyers do struggle the most with is the upfront cost. That's exactly what the down payment assistance program is for. And today I'm here to explain it to you in a way that actually makes sense. So let's dive in. Let's clear up the confusion as to what the down payment assistance is really for. Buying a home has two major upfront costs. There's the down payment and the closing costs. So let's discuss the down payment. This is your contribution towards the purchase. And no, you do not need 20% down. This is outdated information if you hear that from anyone. Number two, the closing costs. These include lender fees, title fees, taxes, insurance, and everything required to legally close the loan. What most people don't know is that the down payment assistance program actually covers both. The DPA will actually come from the cities, counties, state housing agency, HUD-approved programs, nonprofits, employer-based programs, lender-funded assistance, and community development programs. These are the individuals that help this program exist. So to help renters and homeowners be able to afford mortgage payments and help them to make sure they're not paying thousands of dollars out of pocket to be able to become that homeowner, to have the dream of home ownership. That is what this program is for. There's the grants. This is free money that you never have to repay. Grants are a way of a down payment assistance. You don't need to repay them. They reduce upfront costs. They actually increase your buying power. Now, these grants will actually, like I said, they'll come from different type of city home buyer initiatives or state agencies. They'll come from non-for-profit funding programs, employer-sponsored homeownership grants. Then you have something they call forgivable loans. They're also known as like these silent second mortgages. These are the loans that have no monthly payment, usually carries no interest, become fully forgivable after a set number of years. Only need repayment if you sell or refinance the home too early. This is often referred to as a silent second. So if you ever hear that terminology, because it simply sits behind your main mortgage. So as long as you stay in that house for whatever the agreement is based upon taking out this forgivable loan, then you're fine. And it's usually like 5 years, 2 to 5 years for this. There's also what they call the low or zero interest second seconds. These help buyers who need assistance up front. They may not qualify for a grant, or they just simply want to reduce their cash to close as much as possible. These second loans are usually paid back. So when you sell, it's being paid back. When you refinance, it's being paid back, or over the life of the loan. They often do not have any interest, they're deferred payments, and they have a low payment options. Now, let's talk about how this actually works behind the scenes. Like, what actually is the process? The very first thing is when you're looking for this down payment assistance program, right? You need to apply for the loan first. So you have to apply for the mortgage. The DPA approvals happens alongside your mortgage approval. So the program wants you to make sure that you're already pre-approved. In order to get pre-approved, this is what's going to need to happen. Your income needs to be verified. Your credit needs to be in line. Your debt to income ratios need to be in order. Your employment needs to be verified. And it's usually always at least 2 years of employment. Your citizenship or your I-10 status, whether you're a first-time home buyer or you are a seasoned home buyer. But what I mean by a seasoned home buyer, let's say you've owned a property 20 years ago, right? 10 years ago. You haven't owned one since. Maybe you sold the other one 15, 20 years ago. Depending upon the program, you could be considered a first-time home buyer because it's been so long ago. So when you're buying, these are the things that they're going to determine how much assistance you qualify for, what type of assistance you will receive. And when I say assistance you qualify for, I mean, what type of down payment? Is it going to be a forgivable second? Is it going to be that grant? This is what they're talking about. Now, the second part of this process is the program reserves the funds for you. Once approved, the DPA program will lock in the money for you. This is when you officially have your assistance right here. The third part of this is your mortgage loan is under it. So this has nothing to do with the DPA. This is now with the loan company. And your loan company is basically selected by your mortgage broker based upon what you qualify for. And that loan company that they're using need to also be able to be willing to work in hand in conjunction with the DPA grant, because all banks don't do that. So that's why it's almost important to either know if your mortgage broker is familiar with the down payment assistance program and they know what banks and lenders to send your loan to. Now, the mortgage lender documentation is important because once it's underwritten, they're going to look at the grant. They're going to look and see if there's a silent second or any repayable second loan, because this is included in your loan estimate as well as your closing disclosures for the final underwriting approval. Step 4, the funds are sent to the title company at closing. This is when everything happens. The down payment assistance programs will wire the money for your down payment, your closing costs, your prepaid costs, and sometimes interest rate buy down. You will not receive any money up front. So this is not going to you. This is going strictly towards your closing. Most buyers think DPA only covers the down payment, but it actually don't. It covers so much more. So the down payment, on the other hand, let's say you're doing an FHA loan. FHA requires 3.5% down automatically. Conventional, on the other hand, is 3%. If you're doing a VA or USDA loan, that's 0% down, which means you don't have to come to closing with that money to cover that sales price. But keep in mind, there are closing costs involved. Those closing costs can consist of anything from appraisal fee, credit report. Usually your appraisal and your credit report is paid up front. But then there's the origination fee, the processing fee, the underwriting fee, title charges, attorney fees, recording fees, the courier fees, any type of taxes. All of that stuff plays a part into your closing costs that you're responsible for. And a lot of times, borrowers, when they purchase a home, they think that if the purchase price is $300,000 and my loan amount is $300,000, I'm good to go. No, there are a lot of fees involved when it comes to closing and buying a property. Those fees actually will add up fast, and that is why the DPA helps. They help with, like I said, the prepaid items that comes with this. If it's a government loan, there are mortgage fees that come with this, such as the mortgage insurance. If it's, the funding fee, these programs will allow all of that. If there's an interest rate buy down, meaning you're trying to buy the interest rate down because maybe the interest rate is at 7%, you want to buy it down to 6%, that's a fee that's involved. The one thing people really don't understand when it comes to the down payment assistance, they don't realize that there are a lot of fees that can be covered, but then there's things that cannot be covered. Most importantly is what you need to know: what's covered, what's not covered, understand what the biggest misconceptions are and the biggest myths are. So what I'm going to do is kind of break down these misconceptions and these myths to kind of help you understand this even more. In reality, many programs allow incomes up to 120% of 150% of the median income, of the median household family income to qualify. But when I say the median household family income, understand this is your income, because yes, you have to qualify for this as your income, as the household median income. But if you have, let's say, a boyfriend that's there, a girlfriend that's there, a husband, that person is not on that loan. So technically, they're not going to qualify. So it's really your income that you need to take into consideration. Here's a big myth right here. DPA only is for low income people. That is not true. So that is why I says it doesn't it's not for the 120%, 150% of the household median income, because only middle income families can apply. That is not true at all. You need perfect credit. That is not true at all. And reality is, as long as you can qualify for the loan, the FHA loan, some are 580, some are 500, depending upon the company that your mortgage brokers send your loan to. Same thing with conventional. Perfect credit is not a requirement. Another myth: DPA will make your offer weaker. Absolutely not. Strong files will win regardless. So as long as you got a strong file that is put together and a pre-approval, that's all that matters. Where you're getting the money to close from has nothing to really do with the seller unless they're willing to give a seller's credit or a seller contribution. Totally separate from it. Many sellers actually prefer DPA because they know that their buyers are pre-approved and not going to have any additional issues to close. So they know that this money is going to be guaranteed at the closing table versus somebody who may have to pull money from their 401k that sometime may not be guaranteed because depending upon how much taxes may or may not come out. But they know that if this person is pre-approved and they are getting some of their money from a down payment, this deal is going to go through. Take, for an example, somebody who's going to get a gift from a relative or a friend. A gift is not guaranteed. Just because somebody wrote a gift letter and said they're going to give this person $10,000 and it doesn't have to be repaid back does not mean that they're going to get that. But you know they're going to get that down payment assistance that they was approved for because that money was already put to the side for them. There's another myth that, it's too good to be true. Here's the thing. DPA programs are intentionally created to increase homeownership and community stability. So yes, you can apply. It takes too long. The reality is experienced lenders close on DPA loans just as fast as they close on a regular loan. So they actually work simultaneously. It's very important to work with someone that's very experienced because they're going to help you get that deal closed with no issues. DPA means a higher interest rate. That is another myth and so untrue. In actuality, some programs do adjust rates slightly, but many offer competitive or even better rates. And it's based upon the market. And of course, it's what's going on. I always say, marry the house, date the rate. So you can always refinance later on. But what you need to worry about is getting approved for your grant, for your down payment assistance, closing on that house that you want. And you could always refinance later. But make sure whatever you do, keep that credit in order. Then here is one of my number ones myths. Down payment assistance is only for first-time home buyers. Many programs apply to buyers who haven't owned in 3 years, returning buyers, buyers in special target areas. So like I mentioned earlier, a first-time home buyer is dependent up on that lender, what is considered a first-time home buyer, depending upon that program, who they consider is a first-time home buyer. So just because you owned a home before does not mean you're not considered a first-time home buyer. Now, why working with the right realtor and mortgage broker actually matters to you and why this is important, the down payment assistance programs is so powerful, but only if your team know exactly what they're doing. Many loan officers has never worked with DPAs. Many lenders don't even offer the programs. A lot of realtors don't even know how to write the DPA-friendly offers. Many professionals give out incorrect information. That will equal inexperience. And inexperience equals delays, denials, cancellations, and the loss of your dream house. So working with the right team will help you protect your contract, make your offer strong, manage your deadline so you can close in a timely manner. You'll be able to communicate with all the parties effectively, and most importantly, ensure that your down payment assistance funds arrive on time. Now, if you're working with the wrong home and working with the wrong team, it can cost you your home, and honestly, it can cost you some money. So I need you, and when I say some money, the earnest money that you may had to put down, the credit report that you paid for up front, the appraisal that you paid for up front, that stuff costs. And honestly, it's stressful. This is one of the reasons why I am here today, to teach you the truth about down payment assistance programs and overall just empowering your decisions on buying the property that you want, not being afraid of their rate. Because like I always say, marry the house, date the rate. Now, when it comes to the step-by-step process and it comes to your lender, I'm going to just hurry up and break this down again. The first thing they're going to do, they're going to review your complete financial application. This is going to be your bank statements. So when you get ready to meet with your mortgage broker, your loan officers, make sure you have your bank statements, usually your last 2 bank statements. If you're self-employed, sometimes it's 12 months. It just really depends. Your credit score needs to be in line. They go off the middle of the 3 credit scores. Depending on the program, again, they're going to go off the middle of the 3 credit scores, but your middle score is the one they're going to look at. So if your middle score is 590, meaning 0, 590, 800, they're going to go with that one. If your middle credit score, if your credit scores are 620, 740, 690. Well, 690 is the middle, even though it appears to be on the end. And that means from like TransUnion, Equifax, and Experience. So out of 3, whatever the middle score is in number wise, that's the one they're going to look at. They're going to look at your job stability. They're going to look at your debts, your debt to income ratio, how much debt you have versus the income that you have coming in, and your monthly obligations, which is part of that debt to income ratios. This is going to determine actually how you qualify. Then what happens is you get matched with eligible DPA programs. Your lender will actually check the income limits, area restrictions, loan type requirements, credit score requirements, and occupancy rules. So this is why it's important to make sure you're working with the right broker, the right mortgage broker, because that mortgage broker is going to be able to connect you with the right lender for the purpose of making sure you are connected with the right down payment assistance program. Then after that, all of the requirements, the application is completed, which is the program documents, the tax returns, the pay stubs, the W-2s and or 1099s, and your employment verification. Your loan then will be structured accordingly. So the lender from there will calculate the down payment, the closing costs, that grant, the second mortgage terms, any seller credits, and the seller credits is really negotiated when you, the realtor, the two realtors get together. You talk about this property and say, hey, the property is $450,000. I would like the seller to contribute 3% towards the closing costs. The seller may say, no, I don't want to contribute 3%, but I'll contribute $6,000 towards the closing costs, which means seller's credit, okay? Then there's the cash to close. So the cash to close is what you would need to bring to the closing table. But if this is done correctly, your DPA can actually cover the cash to close. Next, everything will be coordinated at the closing. This will include the DPA provider, the underwriter, which is your mortgage company, the title company, the realtors, and the closing agents. This will ensure that all of your funds are wired at the closing. If you want to see if you qualify for a DPA and what your next steps is, and just really to check your eligibility instantly, I encourage you to visit www.downpaymentloanassistance.com. That is www.downpaymentloanassistance.com, and that link will be in the description. There you'll be able to review any available programs, see the income and credit requirements, compare grants, forgivable loans, and seller mortgages. You want to be able to start the pre-approval process correctly. The whole purpose of this particular program today was to just inform you and enlighten you about how DPA work, and for you to know that you can own a home. You don't need a lot of money down. You don't. If you have your gifts in order, you have seller credits, and I'm working with a good realtor who's able to get you the seller's credits involved, and you're working with a good mortgage broker who's able to connect you with the lender to get you the DPA, guess what? You're good to go. You're going to own the home that you want when you want it. So it's up to you to make that decision today. Thank you for joining me. I hope this episode gave you some clarity and confidence about down payment assistance and how everything in it can work for you as a first-time home buyer. Just remember, you do not need 20% down. You don't need perfect credit. You don't have to have years of savings. Better yet, you don't have to technically be a first-time home buyer. You just need the right information, the right strategy, and the right team behind you. So if you're ready to see what you qualify for, visit www.downpaymentloanassistance.com and make sure you join me every Wednesday at 7 p.m. Central Standard Time for Wind Down Wednesdays on YouTube, live at Home Loans Network. This is your chance to get real-time mortgage advice, home buyer education, loan program insights, credit tips, and market updates. This is Ebony Biko, helping you move one step closer to owning your first home and building wealth within real estate. I will see you next time, and I'll see you on Wednesdays.